This is going to be a long-term situation. I think people should be very careful where they have their Bitcoin. I personally wouldn't want to have Bitcoin on Binance. I'd recommend taking action while you can, self-custody if possible. Binance is by far the biggest target to go after in terms of the sheer scale. We're talking like an order of magnitude larger than FTX. And so, this is not that surprising. And this whole industry, because it all grew up in the span of a decade and in a largely kind of jurisdictional arbitrage way, not a lot of regulation. You see a lot of things that are kind of immature relative to the current market structure you see in equities or elsewhere.
Lyn Alden, a macro analyst and founder of Alden Research, has spoken extensively about the SEC's lawsuit against Binance. In a blog post, Alden argued that the SEC's lawsuit is a major setback for the crypto industry, and that it could have a chilling effect on innovation. Alden also argued that the SEC definition of an investment contract is too broad and that it could encompass a wide range of crypto assets. SEC sued Binance and its founder, Changpeng Zhao, on June 6, 2023, alleging that they violated U.S. securities laws. Approximately $780 million of crypto has been withdrawn from the world's largest crypto exchange, according to blockchain data firm Nansen, after news emerged that the U.S. Securities and Exchange Commission had sued Binance for allegedly commingling customer funds. Binance contends that the SEC's enforcement action is a way to claim jurisdiction over cryptocurrencies, which are currently being debated as either commodities or securities. The SEC, however, argues that the company and CEO enriched themselves by billions of US dollars while placing investors' assets at significant risk. Compared to FTX, the situation once again stands out as mass exchange withdrawals characterized much of last November. Meanwhile, Binance tells customers to withdraw their cash from the exchange as the SEC pursues its ideological attack on the crypto industry. In a tweet on Thursday, Binance alerted customers that its banking partners would be shutting off withdrawal by June 13, which could prevent the exchange from accepting deposits or issuing withdrawals in US dollars. Meanwhile, in her interview, Alden has raised questions about Binance, a leading cryptocurrency exchange. Before proceeding further in this video, make sure to hit the subscribe button below for more recent updates about crypto market.
So I think we see so far different things in different jurisdictions. In a number of countries, we've seen the rise of Bitcoin-only platforms, right? So instead of kind of having these platforms that are kind of presented as this more casino environment, we've had these platforms like Swan, but others as well, arise and say, look, if you just want to buy Bitcoin, if you don't want to subsidize and deal with altcoins, if you don't want to, if you recommend someone go to an exchange, you don't want to have to tell them, okay, buy this Bitcoin, don't buy one of the fake Bitcoins, all that kind of thing, all the leverage and rehypothecation that happens. I think this strengthens the Bitcoin only space. I think it kind of validates the Bitcoin only platform model. For entities that just want to have a more serious savings focused approach rather than kind of a casino type of market. I think where we need to see more work on that is in developing countries. One of the unfortunate things is that basically in dozens and dozens of jurisdictions around the world, Binance is like their go-to for when they want to exit their system and get on this. And Binance has a really strong ground game because they're super profitable from all their casino type activities. So they have this ground game. They go out. When you look at all these analysis, like who owns quote unquote cryptocurrency, whether it's Bitcoin, stablecoins, other cryptos, it's often just people owning it on Binance. It's this gigantic global honeypot, which is a big risk for a lot of them. And I think we need better ground games among Bitcoin companies in those space. Like they're not as capital rich as Binance because trading and the casino activities are a very profitable short-term thing. So they've had this big boost, whereas Bitcoin only companies, it's a longer grind, kind of a lower time preference thing. And I just think we need more and more access points so that if someone in Egypt, if someone in Indonesia, if someone in country XYZ says, where can I buy Bitcoin? I think we need really clear answers that are not casinos. And so I hope to see over the next 5 years more and more development of Bitcoin platforms that we've been fortunate enough to have here elsewhere. And of course, a lot of these companies can serve global clients, but not all of them and not at every scale. So I think that's where we're going to see more and more bifurcation between Bitcoin only space and the broader kind of crypto casino type of environment. I think the kind of the like the fraudonomics of the token empowered VC space have been very powerful. And this is a more utilitarian type of message, which is less kind of exciting and sexy for a lot of those kind of big pools of capital. But it's like for ones that are serious and say, hey, we want to build out this like 5, 7, 10 year thing. I think we're seeing that, and there is a decent amount of capital in the Bitcoin only ecosystem, even though it's a small fraction of the broader space. It's just that those giant casinos are that's where most of the capital's gone. I consider it mostly malinvestment, and so I do hope to see more of these platforms. You know, the peer-to-peer space I think could use a lot more love, kind of peer-to-peer Bitcoin platforms, as well as just kind of Bitcoin only centralized platforms to help people on ramp and provide Bitcoin services to people to kind of you know give them access points into the space, provide education, help them self custody over time. I do hope to see more of that. And there was a report by Trimble Venture Partners a couple months ago where I think it's actually a month ago. They covered basically they looked at how much VC capital is in the space, and if you look at if you look at seeds and Series A and pre-seed, I believe, um, you know, Bitcoin companies were like 2% of the VC capital in the broad space, and the other 98% was multi-coin stuff, which also includes, a lot of those platforms have Bitcoin too, but it's only 2% in that Bitcoin only space, and so I think that the base has a lot to grow from there. Let's put it like that. I don't think we're going to 100% overnight, but I think we can get off too.
On-chain analytics firm Glassnode made a startling reveal about the markets after the SEC filed its lawsuit against the Coinbase and Binance crypto exchanges. Following a crescendo in U.S. regulatory pressure on major cryptocurrency exchanges Binance and Coinbase, the market experienced significantly volatile moves in both directions. However, the magnitude of realized losses recorded on-chain remains quiet at $112 million. This remains minus $3.05 billion, 96.5%, smaller than the largest recorded capitulation event, suggesting an increased degree of resilience amongst market participants. According to Glassnode, Bitcoin investors have largely ignored the latest crypto exchange legal battles. Alden provides insights into how these lawsuits could impact the overall cryptocurrency market. She advises investors to diversify their cryptocurrency holdings and carefully assess the risks associated with specific exchanges.
I also think we're seeing some degree of global bifurcation where there's some areas that seem willing to become hubs for this type of thing because of the revenue they get or whatever the case may be, and other jurisdictions like the United States are taking among the most hardline approach on it. So we're seeing kind of this like bifurcation spread out. Another thing I've been trying to monitor is the overall impact of Bitcoin's price because, as Rafa mentioned, Bitcoin itself is not really affected by this other than the fact that you have to ask who is selling, who might be forced to sell, who's getting liquidated. And of course, one of the risks is that Binance could sell some of its Bitcoin. And, if you go back to the when Luna blew up, let's say in May 2022, if you look at Glassnode data, so they do their best to try to figure out how much Bitcoin different exchanges actually have. They use a bunch of different on-chain characteristics. If you talk to Checkmate, who works there, there's some that they're more sure about than others. Like some have kind of clearer heuristics than others, but they do their best to kind of track how much Bitcoin each exchange has. And if you look at FTX's balance, after the Luna fiasco, FTX's Bitcoin balance started to drop significantly. That was kind of a sign, especially in hindsight. People weren't really looking at it too much at the time, at least most people, but that they were actually, we found out later that they didn't actually have any Bitcoin. So there are a lot of customers thought they had Bitcoin through FTX, and they didn't. And it's in large part because FTX was selling the Bitcoin that was actually customer Bitcoin. So far, according to Glassnode data, we don't really see that with Binance. But the risk there is that they, according to Glassnode, they have like 700,000 Bitcoin. And so I think that some of the selling pressure we see in Bitcoin is that some investors have concerns that if Binance does have some sort of solvency problem, that they might sell some of their stack, or might sell some of their customer stack, and kind of damage the price in that way. So whenever you have these big honeypots that can be cracked open in various ways, that does present kind of this like near-term price risk or volatility risk. I think that that does give Bitcoin companies an opportunity to say, here's why we're different, here's what we're doing. It's a very different environment, and hopefully some of that capital can shift over to companies that are trying to build a longer-term and more ethical foundation instead of trying to get more and more people to trade and dump known things on retail. I think it's more about companies that educate, companies that build technology, other layers on top of Bitcoin, wallets that use those layers, innovative ways of using Bitcoin. All these on ramps, educators, technology developers. I think that's where the long term story is. And I think that the more these kind of casinos are marginalized, the more we'll see capital flow towards, I think, some of these more foundational things that need to be built and need to continue, being rolled out.
The SEC alleges that Binance failed to register with the SEC as a securities exchange. The SEC's lawsuit against Binance is still ongoing. It is unclear how the lawsuit will be resolved, but it is likely to have a significant impact on the crypto industry. Bitcoin prices fell by as much as 6% in the first hour after the lawsuit was filed. The lawsuit has also raised concerns about the regulatory environment for cryptocurrencies, which could further dampen investor sentiment. That's all about today's analysis. Do you agree with Lyn Alden's perspective about how the lawsuit against Binance can have a significant impact on the broader cryptocurrency market? Share your thoughts in the comments section that's below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.